So rules of origin is an important topic for anyone who's looking to export. It's particularly important at the moment with the new trade agreement with the European Union. I'm not going to profess to be an expert in the subject, but I'm glad we do have an expert with us today. So without further ado, I'll hand you over to Mike Wilson. Thank you, Mike.
Thank you. Thanks for the introduction. All right, I'll just share my screen. Okay, you see that okay? Yeah.
Yeah.
Okay, right. Good afternoon, everyone. Thanks for joining us over this lunchtime. So yes, as we're going to talk about rules of origin after the UK-EU TCA, but also rules of origin in general, as we've got other free trade agreements which we're entering into, which may come into play. So my name is Mike Wilson, founder and CEO of Go Exporting. We're going to look at what are rules of origin, the difference between non-preferential and preferential rules of origin for anyone that's not sure on that, and what the implications of the UK-EU Trade and Cooperation Agreement are, and then really how they work in practice and how to determine and claim origin for your products. So covering hopefully all the areas that you need to look at. So just quickly on Go Exporting, we're, as the name suggests, specialist export consultancy helping companies to launch into new international markets. And certainly in the last couple of years, we've made Brexit a speciality to help our customers, clients manage through the implications of the transition period. So what are rules of origin? We're going to look at 4 different areas over the titles that you can see there. So firstly, rules of origin. Origin is the economic nationality of your goods. So it's, as you can see there, we've depicted passports from different countries with typical products from those countries. So it's like a passport for goods for each country. And it's been described as the greatest Brexit challenge that you probably had never heard of until after the trade agreement came into force. We wrote an article on this subject September last year, and unfortunately it's proven to be true for a lot of companies. It's being more of a challenge than they were expecting. It's, as we say, it's the goods passport to the way they are dealt with in international trade in terms of duties, standards and compliance. And it can have a profound effect on the viability of your products in international markets. So why is origin important? Well, there are around £12 trillion worth of goods traded annually, and the authorities need to keep track of those for statistical purposes, but also the origin of each shipment needs to be declared to make sure that the correct duties are being imposed, to ensure that product standards are correct, the correct licensing, to guard against dumping from one country to another, and to ensure compliance with relevant trade agreements, for example, the UK, EU, TCA, and others. So it's important that origin is an important concept for international trade. But you might say, isn't origin obvious? Is it not where the goods were shipped from? Well, no, unfortunately it's not. Is it where the final goods are produced? Well, it can be, but not necessarily, because of today's complex supply chains. If we look at things like the Boeing Dreamliner, for example, that has components from 9 different countries. UK-built cars, you would think that would be straightforward, but in fact, only 41% of parts in UK cars are sourced in the UK. And in actual fact, of that 41%, there's only 25% which is actually UK origin. So it can be a very complicated area to work through and to understand. And it is a key area of the UK-EU free trade agreement and with other countries as well in determining duties in particular. So, for example, you know, in the agreement between Europe and Canada, you're allowed to have 50% non-originating products. In the EU-Japan agreement, it's 45%. So there are differences between different agreements as well. So it's important to study each agreement in its own right, depending on where you're selling to. And you know, there could be components from several different countries, as we said, and it depends on what percentage of the final product that comes to. for example, a product assembled in Wales, let's say, or reworked in Wales. So if we use an example of a washing machine, the inlet control valve might have come from India, the drum from France, the water pump Germany, seals the UK, electronics Taiwan, and the casing from the UK, and then it's all assembled in Wales. So you have to work out whether that complies with the rules for each trade agreement where it applies, or not, or non-trade agreement for the origin of the products. So given this complexity, that's why rules are required to determine origin. And they do vary, as we've said, country to country, agreement to agreement, and it depends on the trade agreements that are in place. It's also, they're designed to stop fraudulent claims for preference. So for one country trying to take advantage of an agreement between two others, for example. So to stop someone shipping from India, say, to France, and then to be able to then ship on to Japan to gain preferential origin, preferential duty rates, this kind of thing. So it's designed to stop that kind of activity. And it's all based on the HS code, the customs code for the individual products. And as we'll see later, for the UK, EU TCA, that is particularly important because the rules do change with a lot of different HS codes. So to start with, we're going to look at the general principles of rules of origin that are applied in trade agreements. And then in the following sections, we'll look at the specific rules in the UK EU TCA. It's important to understand both because of the raft of new trade agreements the UK is entering and the possibility to expand business into new international markets outside of the EU, something we were talking about this morning on the future of export. So why are there two sets of rules? Well, we've got preferential or non-preferential origin. Preferential is where there's a reduced duty. Non-preferential is where there's no trade agreement between countries, and WTO rules apply to the transaction, to the trade. So again, so it does depend on the relationship between the countries, whether there is a trade agreement that exists. And it's one of the consequences of us leaving the EU is that we no longer follow EU trade agreements on where there are preferential terms. So we've had to negotiate our own trade agreements with, you know, a raft of different countries. The EU has around 40 at least trade agreements in place, 40 different countries. The UK at the moment has around 30. Plus the UK-EU TCA, which has just been agreed. So as you can see, there's still some gaps where we were covered by trade agreements previously, which we're now no longer covered by. But equally, there are some trade agreements now that we didn't have previously with the EU. But that's where the two sets of rules come in. So where there is a trade agreement, we get preferential rules of origin, and where there isn't an agreement, it's non-preferential. So non-preferential origin, this is often referred to as the WTO rules or WTO duty rates. And that's used to determine the country of origin for trade statistics, for labelling requirements, trade policies, for tariffs, quotas and anti-dumping. So each country actually establishes its own non-preferential rules, but all based on similar principles around the WTO rules. So the general principle is that you will charge the same rate of duty to all countries unless there is a trade agreement in place, a separate trade agreement. Now, some of the WTO terms, as you can see, there can be quite high. Animal 16.3, dairy 37.5, but others lower, manufacturing 2.2, fish 11.6. So it's you know, the WTO duty rates can have a significant impact on trade if there isn't a trade agreement which gives preferential duty. Now the UK issued, before we left the EU, what's called the UK Global Tariff, and that is our version of WTO, if you like. So our rates may be lower than some of the ones in the WTO. It's we've picked rates to simplify the procedure and to help UK manufacturing and production by dropping tariffs to 0 on a wide range of products that are used in UK production, and retaining tariffs in some areas such as agriculture and cars to help out, to protect our production as well. So we've used the UK global tariff within the WTO rules, but to help our own trading arrangement and manufacturing arrangement. The EU has a similar thing, it has the EU Common External Tariff, which is their version of the rules. So they may not be exactly the same duty rates, but the duty rates will be the same across all WTO countries, or countries that are using non-preferential origin. So there are two main principles for establishing non-preferential origin. First is wholly obtained, which is, self-explanatory really. Those are products which are obtained entirely in one country without any additions. So in general, it's things which are grown, born, or bred, or mined within a country, are products which can be classed as wholly obtained, so their origin is undisputed effectively. If that doesn't apply, then it's the country of last substantial processing. So origin is the country where the last major economic working or processing or transformation has taken place. And these are the two key principles for non-preferential origin, which we'll find are also used to a certain extent in preferential origin as well. Some examples of wholly owned products: wheat, flour, milk, olive oil, eggs, for example, mushrooms. So you get the idea. Things that are grown or mined or produced in a particular country. So that's non-preferential. And with the preferential rules of origin, these are determine origin where a trade agreement exists, and they can be more onerous than proving non-preferential origin, because they're giving preference, they're giving a benefit. So they establish how goods qualify for preferential duty under the terms of the agreement. And as we said earlier, they are different with each trade agreement. Between different countries or trade blocks, they can be completely different agreements. And generally, as we said, there's a higher bar than for non-preferential. So it can be complicated. And some goods may even be excluded from the agreement, depending on the trade agreement which has been entered into between the two countries or regions. So to gain preferential rates of duty, preferential rules of origin that apply, you must meet the criteria that is laid down in the agreement. And that's, to say, generally is to confer reduced or zero duty. But the two main principles remain the same, but with greater control. So there's wholly obtained that we've just looked at, that goods that are grown, for example, in the country. And then there's substantial transformation. So substantial transformation is where added value has been put into the product by doing some kind of working or processing onto it in the country that you're in, so in the UK in this case. So that can either be adding value to the product, it can be by working the goods so that it changes their customs tariff heading. So you buy in a product under one heading, you work it and it becomes a different product heading. And in some cases, the special criterion exists in agreements where if a certain process takes place on products, then that becomes enough to create the origin of that particular country. So each of these can lead to the nationalisation of the product. So as an example here, the change in tariff classification. So we've got a product which is coming from country A, which is HS code 11, chapter 11 for flour, and then chapter 4 for butter. But in this particular country, Thailand in this case, they're turning that product into toasted bread, which has a HS code of 1905.4. And that's because they've changed the tariff heading, the tariff code for that product. It now becomes a Thai product and therefore eligible for preferential duty rates under the Japan-Thailand economic partnership agreement that you can see there. So it can they can claim preferential duty, zero duty in this case, on this particular product. And the way that's worked out, or the other way you can work it out if you don't change the tariff heading, is by what's called the value added calculation. So how much more value are you putting into the product by the work that you're doing to it? So, for example, in this example, we can see the value of non-originating material on the left-hand side of the pie chart. The originating material, so that's the material that originates in the country, and then you can take into account labour cost, profit, general costs, other costs, different types of processing, to show that that added value is greater than the percentage which is stipulated in the trade agreement. And if it is, then you can claim origin of that product for the UK, for example. So it can be quite complicated to work this out and to provide evidence of this, and to work through all of the different processes and materials that go into a particular product. As we saw earlier with the example of the Boeing Dreamliner, there could be 9 different countries where the products are coming from, and then what processes are being carried out in the country where the product is assembled and further manufactured. So it can be complicated. And because of that, it can be quite costly to prove origin of the product. The final way of looking at preferential origin is significant transformation is through special processing. So this is where a particular process is applied to the product and then can confer UK origin, for example, regardless of whether the HS classification has changed, but only if a specific manufacturing process which is agreed in the free trade agreement is performed. So as an example, if a product is turned from yarn into fabric, or metal is heat treated or coated, for example, that can be the type of process which can be agreed in a free trade agreement is significant enough to actually change the origin of the product to the manufacturing country, so to the UK in this instance. So we have those 3 different ways of showing the origin of that the product has been changed enough, or enough value being added to it to become a UK product. Some question whether it's worth it. It can be expensive. It can be costly due to the complexity to substantiate origin. In 2013, the Trade and Investment Balance of Competence Review found that admin and compliance costs range between 4% and 15%, and then can therefore outweigh the duty reduction. So sometimes people will not bother to try and claim origin because the compliance costs are too high. For example, the CEO of the Chemical Industries Association stated in a House of Lords report that because of the several stages of the production process and the synthesis involved, the costs of providing technical proof would outweigh the benefit of duty-free sales in their particular case. Of course, that depends on what the WTO rates are that you're comparing it to. So I mean, if their only WTO rate is 2% and it's going to cost you 4 to 5% to work out and hold the information and the compliance costs, then obviously there's a discussion to be had as to whether that's worthwhile. But on the other hand, if the WTO rate is 37%, then in most cases it's going to be worthwhile to be able to claim preferential duty, preferential origin. And the most recent report by the London School of Economics in 2020 reported that rules of origin compliance costs could be around 8%. This was specifically looking at the food industry. So again, that's quite a high cost. But again, as we saw earlier with food, agriculture, the WTO rates can be quite high, up to 37% or so. So that may still be worthwhile to claim origin in that particular case. So they're the sort of general rules, excuse me, that apply to any sort of free trade agreement or non-free trade agreement situation. So the preferential and non-preferential duty rates. Non-preferential is sometimes referred to as most favoured nation rates under WTO rules. So you can hear both phrases, but effectively, if it's not preferential, if there isn't a free trade agreement, then you're looking at the WTO rates or the country's equivalent of those. So, for example, the UK global tariff and the EU common external tariff. But what does the UK-EU Trade and Cooperation Agreement actually say? What does that bring in as far as rules of origin are concerned? So we'll have a look at the situation in looking at what it actually says, the concept of bilateral cumulation, sufficient transformation as far as this agreement is concerned, and some of the issues that gives us, and potential solutions, and how you prove origin. So what it says, under the rules of origin in the UK-EU TCA, there is 0% duty for all qualifying goods. Now that was one of the headlines, wasn't it, when the agreement was announced, and everyone was fantastic. You know, if it's a UK or EU product, then the zero duty, we can move goods pretty much as we've been doing before. And it does apply both ways. There are also no quotas on movements of UK and EU goods. But in the detail, you must be able to prove origin, and different rules apply for different products. So this is the critical parts that we're coming on to in terms of the implications of the TCA. Everything is based on the HS code, the customs code for your product, and the rules do vary quite considerably in some cases by the actual HS code. So you need to check for each of your products what the actual exact arrangements are, the exact agreement is. And you can check that on that website with the link there that will show you what the actual rules of origin are that apply to your HS code, the HS code for your product. So some examples. So if we use the example of the HS code for chapter 87, which is vehicles, under subheading 8701, the max NOM, which stands for the maximum non-originating materials, is 45% of the ex works price. So that means that you can only have 45% of the value of your product from non-originating materials, in this case, in order to be able to claim that it's a UK origin product. But then if you look at under subheadings 8702, 3 and 4, that max NOM percentage actually rises to 70% of the ex-works right price. And those categories are mainly to do with batteries for electronic vehicles. So it's a way of trying to encourage production of electronic vehicles and electronic batteries for them to make sure that the UK doesn't fall behind other countries on that. And the same with hybrid vehicles. The max NOM is 60% of the ex-works value. So in these cases, you can see there's quite a variation of the percentage which you can work to in order to still be able to claim UK origin. So 70% maximum non-originating products is a big percentage. So there's virtually, it's very small, only 30% UK origin within that product, but it can still be claimed as UK. And then if we look at something like HS Code Chapter 84, which is machinery and mechanical appliances, then for example in 8467 the max NOM is 50%, or CTH. Now CTH stands for change in tariff heading. So the non-originating materials in this case must be classified in a different HS code heading to the final product, or they must be a maximum of 50%. So a little bit like the example we showed of Thailand previously, where they were buying flour and butter and making it into toasted bread, that percentage would have to be a maximum of 50%, or you're changing the tariff heading as we were in that particular case. And if we look at HS Code Chapter 39, plastics and articles thereof, subheading 3926, the maximum again is 50%. There are a lot which are 50%. Or CTSH. Now CTSH is in the change of tariff subheading. So you're not having to change the whole tariff heading, but just the subheading of this in this case. So you can maintain it as Chapter 39, but the 26 and the numbers after that would have to change in order to be able to say it's a UK origin product. So you can see it's quite complicated and it's different for each product, and you really do need to check for each of your products what the actual rules are. And you can do that through the website that we mentioned earlier. You can also do that in the trade agreement, the trade incorporation agreement itself. In Appendix 4, I think it is, there's a list. But the easiest way is on the government website. You put in your HS code for your product and it'll tell you exactly what the rules of origin are. Excuse me. Now the trade agreement did also bring in this concept of bilateral communication, with bilateral cumulation, sorry, which at the time, everyone, when you first look at it, everyone thinks this is great because it's a very positive aspect of the TCA. So what it means is that EU parts, components and processing count towards UK origin and vice versa. So that sounds great, doesn't it? And anything you buy from the EU and make into your products and process will count to UK origin and vice versa. So that's really protecting a lot of companies who have got used to buying products and materials and so on from the EU, assembling them or putting them together with their products and sending them back again. So it's protecting that. But a note of warning or caution here: there must be sufficient transformation to have occurred to those products that you're bringing in from the EU, for example, in order to be able to claim UK origin. If there's insufficient transformation, then duties may apply. And we'll have a look at that in a little bit more detail on the next slide, and there's some sort of quite well-known examples of where companies have fallen foul of this particular rule. So yes, there is bilateral accumulation. EU parts, components and processing will count as UK origin, but only if you've carried out sufficient transformation anyway in the UK. So what is sufficient transformation? So if you import something from the EU, hold it in stock and then resell it to the EU, would that class as sufficient transformation? No, it wouldn't. That's insufficient, and so duty would apply. And this is the example that's been widely publicised in the media, the Marks and Spencer's Percy Pig example. So they were importing from Germany the product into the UK and then selling it back out into Southern Ireland and other countries. But because they're not doing anything to transform that product, duty would apply on that if they continue to act in that way. We have a client who is importing printing machines from Italy, holding them in stock in the UK and then reselling them throughout Europe. And again, it came as a bit of a surprise to them that they're reselling an EU product to the EU, but they're going to have to pay duty on it, or their customers are going to have to pay duty on it. So that is a hidden issue in the TCA, which people weren't expecting. What about if you import from the EU and then you repack or you relabel the product and then resell to the EU? Well, again, that's insufficient transformation, so duty would apply. There are certain processes which are classed as non-sufficient, or they're not enough to actually change the origin of your product, and there is a list of those in the TCA as well, so you know which processes are not allowed or don't count towards sufficient transformation. Well, on the other hand, if you import from the EU and then you process or you manufacture those products in some way, you change the tariff code, and then you resell back to the EU, then assuming you have done enough sufficient transformation for your HS code, then 0% duty would apply, as in the example that we showed earlier. So It's quite specific, and you need to make sure that you are creating sufficient transformation, whether that's enough added value, particular type of process onto the product, or changing the tariff heading in order to create a UK product. So what is the solution to that? That can obviously be quite damaging. So for our client that was importing machines from Italy, one of the solutions we suggested to them was that they could hold those goods in a customs warehouse. So what you do is you import the goods into the UK, but you don't clear them for free circulation in the UK. They remain, effectively they remain as an EU product in a customs warehouse. And they retain their EU status and then can be re-exported back to the EU duty-free. So, to be able to do this, the warehouse needs to be officially sanctioned as a customs warehouse. It needs to have customs approval. The good thing is now that no financial guarantees are required in order to find that, and you can actually have your own warehouse classified as a customs warehouse. You have to apply for it and go through a process, which is not necessarily easy, but you can go through the process and have your part of your own warehouse deemed as a customs warehouse. So you could import the goods just the same, put them into in your own warehouse, your own customs area of your warehouse, and then re-export them, and then you wouldn't have any duty on those goods. And another potential solution which has been bandied around and been suggested is using a process which the EU has called returned goods relief. So this is under EU legislation. It allows any goods that are from the EU, have been exported from the EU, to return there within 3 years, duty-free. But there are conditions which apply. There can't have been any transformation of the goods apart from normal repair or restoration or maintenance on it. And you need to show the original import documentation. So this can be commercially sensitive, of course, if you bought something in at one price, and then if you're trying to export it again under return goods relief, you would need to show the original invoice, and your customer may see that original declaration when if you were returning it or sending it back to a customer within the EU. So it may not be the best, commercially the best solution, although it is a way around the situation. But you are potentially giving away what your margin is. So how do you prove origin to customs? What do you need to do? Well, you need to hold the evidence to prove the origin. You need to have a record, an audit trail, and that may require you getting evidence from your origin, of origin from your suppliers, for example. So we are suggesting to our clients that you do ask for a supplier's declaration from all of your suppliers, and you keep that in your records. It is possible to self-declare origin and under the terms of the agreement, so you can make a statement of origin and send it to your customer with the export, and then they can use that to claim zero tariffs. But be aware that you do have to be able to substantiate that if ever challenged, and there could be some substantial penalties if you can't do that. So it's worth only doing it if that is the case. But you can write a self-declaration. That's one of the good things with the TCA, that self-declaration is allowed within the agreement. You should include on your invoice and other documentation a statement to the effect that the goods have preferential origin if that's the case, or non-preferential if it's not the case. Templates of the wording can be found in the TCA. We'll look at some in a moment. But one thing to remember is that if you have to actually claim preferential origin, so you have to say these goods are being supplied under preferential origin and they're from the UK, for example. Otherwise, customs will just apply the standard WTO rates to you. So it's important that you do remember that you have to declare it. The other way that you can show origin to customs is what's called importer's knowledge. So based on your if you're the importer, like based on your knowledge, you can claim the preference on the import. You could say, I know that these goods are EU origin, for example, but you may be asked for evidence, and we recommend that you do ask for evidence as well yourself to make sure that that is the case. You need to be confident and you need to be able to prove it if challenged. There is a special dispensation in place until the 31st of December this year, where UK and EU exporters don't need to have a supplier's declaration in place when the goods are exported. Where again, you must be confident the goods will meet the rules of origin, and you may be asked to provide one retrospectively after that date. So it's wise to have it in place, and we're certainly advising clients to get it in place now. And I know a lot of big companies are doing that. They're going through a process with all of their suppliers, asking for the information, asking for suppliers' declarations, so they can hold them on record, and you know, they're in advance of the full regulations coming in. Of course, at the moment, if you're importing to the UK, you can defer your customs declarations for 6 months on imports. So, you know, you've got another grace period there in terms of having to have a supplier's declaration. But as I say, we would strongly recommend that you have the information to hand as soon as possible, because you will need to be able to show it retrospectively anyway. So the origin declaration, the wording that you put onto your invoices and commercial documentation is laid down in the TCA. There's a template, which is this here. So if on your commercial invoice, you would put the exporter of the products covered by this document, exporter reference number, that's your reference number, declares that except where otherwise clearly indicated, these goods are of UK preferential origin, if that's, you know, if this is you sending the goods out. And you need to put that against each different HS code to show that that is the case. Now, theoretically, you should only have to put this once, but we are hearing of people being asked to put it on against every line of the invoice, or certainly against every HS code to be certain. And there have been some issues around that with some companies. So to be on the safe side, put it against each HS code at least, and possibly against each line. It can be as a part of the description of your product in your SAP system, for example. The other thing you can do is to get either provide or to have a long-term supplier's declaration. And what this is your supplier, or you telling your customers that, you know, that you supply to regularly or you buy from regularly, that this is a declaration that covers all of our goods every time we supply them to you. And this is the template that's in the TCA. So as you can see, it asks for you the HS codes of non-originating material. And one important point is that here it is asking for the value of non-originating materials used. Now, of course, that may be commercially sensitive information, which you may not want to put in, or your supplier may not want to put. But it's there, and it can be useful to cut down on the paperwork as just send it once. And the other area that under an easement really under the trade agreement is where we have the general system of preferences. Now this is special arrangements, customs arrangements for goods coming from developing nations. So it's to help developing nations to be able to, you know, improve their economies, to improve their situations. And it used to be that the goods had to be shipped directly to the country that they were going to end up in. But that rule under the TCA has been replaced by something called non-manipulation. So what that means is you could now import something from a GSP country, a developing country that's covered by the agreement, and you could store it in the UK and then later supply it to the EU, even if you've done nothing to it, still duty-free. So you don't have to alter it or transform it in any way, but it does need to be a customs warehouse that the goods go into. And consignments can be split, so you can bring in, you know, 20 tons of a material and send out 1 ton to 10 different or 20 different customers. So that's a useful improvement in the trade agreement for goods coming in from the developing countries, general system of preferences. So how do rules of origin work in practice? Well, let's have a look at exporters first. Exporters' responsibilities here. So you have to determine the product's HS code, check the origin rules which apply on this government website. That will tell you, the rules under depending on which country you're exporting to. So not just the EU, it'll give you for every country. You put in the country that you're sending to, and it'll give you all of the details. And then you need to be able to verify the origin of the goods and decide from there whether to claim preferential or non-preferential duties. And as we saw earlier, there can be a difference there, but it can be onerous to prove preferential duty. So you have to make that decision if it's worthwhile or not. And then you need to provide the relevant certificate of origin or proof of origin. So in terms of the UK EU agreement, as we've seen, that can be a self-declaration, a customer declaration, or a supplier's declaration, or even by importer's knowledge. But in some other areas, you'll need to provide a Chamber of Commerce certificate, an e-certificate, an EUR1, for example. And if for goods that are being imported from the EU, the EU issuer of the declaration of origin needs to be what's called a REX importer, which is the registered exporter system. So they need to be an approved exporter basically to be able to issue that. We don't have to do that here. The government, as we've seen, has allowed anyone to issue the supplier's declaration. And then you must comply with the other origin requirements such as shipping, invoicing, labelling, all of the different obligations that are in the agreement or under WTO rules. If you're importing, you need to check with the exporter whether the goods meet the origin criteria for any preferential tariff. Request proof of origin is to be sent with the goods and in advance, and you hold it in your records. Your importer, your customs agent, will submit the import declaration and the proof of origin to customs. They will decide if it's accepted or not and if the preferential rates can be applied. Note that the EU as the importer, for example, are legally liable for ensuring the accuracy, and you bear the consequences if it's not accurate. So just saying you've got a supplier's declaration from your supplier is not enough. You need to be able to be reasonably certain that that is accurate, or else it could fall back on you. And then you need to retain the documentation for the retention period, which I think is something like six years. So how do you claim origin? We've looked at this a little bit, but let's look at it in a bit more detail. As we've seen, we've used this example, the Boeing Dreamliner. It can be complicated. It can be very complicated. So you've got 9 different countries supplying there, different components of different value to the overall project, and you need to be able to work out what the final value or the final origin of that product is. The value of the value added in the UK if it's been assembled here, and the processes that have been carried out here. So this is the flow chart for deciding the rules of origin. So there are three major elements to rules of origin. There's the origin criteria, which we've been talking about. So that's whether it's a wholly obtained or produced good, whether it's produced exclusively from originating materials, you can see here, or if it satisfies the substantial transformation criterion that we've been talking about in the different free trade agreements in this case. And that can be, as we've seen, a change in the tariff classification, or it can be the value added criterion. You've added enough value to be able to prove its UK origin, or a specific manufacturing or processing operation has been carried out. So that's the origin criteria, and you can follow that through to make sure your product complies. The next element is the consignment criteria. This can be where the goods have to be shipped direct, for example, from one country to another, and they can't go through a third country. You have to check that with the free trade agreement if it's allowed, if transshipments are allowed, for example, and what the rules are around the consignment criteria. And then there are the procedural provisions that we've just been talking about, you know, who can supply the certificate of origin, the supplier's declaration, what kind of transportation documents are required, and so on. So there are some exceptions to the substantial transformation criterion. There's the accumulation, which we have in the UK-EU trade agreement, this bilateral accumulation of products, so that EU goods count towards British and vice versa. And then there's a concept called de minimis, which relates to the tolerance rule. So there's a certain value or volume of non-originating content without affecting origin. So that's usually around 10 to 15%. And then there's a list of non-qualifying operations, which are classed as minimal processes, so that they don't confer origin. For example, packaging, labeling, or just assembling the products, they're not sufficient transformation to qualify for the goods to be changed to UK origin. So we use, when we're doing this kind of work, we use this this kind of template that we use to calculate with the client and to analyze what the actual origin of their product is. So in this case, we're just giving an example of fire doors. So we look at the tariff code, we're trying to get to UK origin. So we look at what's it made up of, what components does it comprise of. So in this case, we've got 4 different components from France, Netherlands, Japan, UK. We put down the percentage of the ex works price in this case that each of those comprises. And then the other costs that go into the ex works price, so the processes that are carried out, so wrapping it in vinyl, adding fixtures and fittings, any kind of treatment and so on, and what percentage of the value of the product that contributes to. And then we can add in profit, and we can add in overhead, other costs, labour costs, as you can see, in order to build up the 100% ex works selling price. And then you can refer that back to the trade agreement and see if those percentages work out. So the max nom, for example, is less than 50% if that's what it relates to for your product. So this is how we work it out. We work through it with clients. This template we're happy to supply it later if anyone would like to have a look at that and use that, or we can help you work through that together. So, in summary, rules of origin can be complicated. The importer is legally responsible so you have to be sure that the products are the origin that you're claiming, and you need to fully understand the principles, and you need to fully understand the principles for under each free trade agreement, under each agreement, or under WTO rules. So you need to be aware, you need to check each time. Just knowing that you comply with the UK-EU trade agreement doesn't mean you're going to comply with the UK-Japan agreement or the UK-Canada agreement or the new Ghana agreement, for example. You'll need to look at the information for each one. So you need to fully understand the principles, and you need to have proof. It's required. You need to have proof to be able to claim origin. You need to be able to show an audit trail, if you like, that this is what's happened to this product, this is how we claim origin, this is what our calculation is. And as we've seen with the EU-UK agreement, there are this added complication of the fact that EU goods coming in to the UK, if they're not sufficiently transformed, will apply duty when they're sent back to the EU. So, and a lot still depends on the other agreements that we get with other countries as to which countries are going to be attractive for us to sell to. It is different in each one. So no matter what, proof of origin will be required, and that does lead to some costs and complications and compliance issues, and holding the right amount of information, the proof that your product does comply with the regulations to say it's UK origin, for example. And that's it. So if there's any questions, I'd be pleased to try and answer them.
Thank you, Mike.
Thank you, Mike. We've got a number of questions.
The first one's from Philmani. You'd be interested to know the rules the rules for export of services. Sorry, Mike, you're on mute.
Can you hear me now?
Yeah.
Okay. So yeah, I mean, there's no rules of origin for services as such, and if that's what the question is, but in terms of servicing, you can supply pretty much the same as previously to the EU, and the reverse charge VAT rule still applies. So you would VAT is effectively chargeable or applicable in the country where the service is being carried out, but it's your customer that is responsible for claiming that VAT and paying that VAT to their authorities, basically. So they would you on your invoice would put the reverse VAT charge statement saying that that your customer should account for this VAT under the reverse charge scheme.
Thanks, Mike.
Another question from
Can goods exported to the EU and returned to the UK for repair and return also qualify for returns relief?
Yes. So you can use either outward processing relief or inward processing relief for that. So if you've got a good that's coming back from the EU to the UK for repair, you would claim what's called inward processing relief at the time of import. And then you don't pay any duty or VAT on the import, and then when you send it back out again, you use the same process to send it out, and again there's no VAT or duty for your customer, unless there's a charge for the repair, in which case there would be duty and VAT on the value of the repair.
Okay, thanks, Mike.
I've got another question from Emma Jones.
If goods are manufactured in Pakistan, imported to the UK, and then exported to the EU, would duty be due on the goods when leaving the UK for the EU?
Yes. There's a simple answer to that. Yes, they would.
Yeah. Thought so.
And then from Sarah, we've got, can the customs special procedures, customs warehouses, etc., be implemented for goods imported to the UK from the rest of the world, not just the EU?
Yes, they can be implemented from anywhere, basically, anywhere you import from. So the previous example of Pakistan, you could import them into the UK, into a customs warehouse from Pakistan, so you wouldn't pay any duty or VAT in the UK, and then you could re-export them to the EU, but there would still be duty in the EU that would relate to Pakistani products.
Thank you.
One
question from Brian. Is a supplier invoice sufficient as proof of origin?
At the moment, yes, you can just use the supplier invoice, providing it's got the statement on there saying what the origin is. But from the end of the year, you will need to hold a supplier declaration as well. And as I say, we are recommending that clients get that supplier declaration sooner rather than later.
Okay, thank you. And the last question is from Giancarlo. He sends marketing materials to the EU originating from non-preferential countries. He sends this free. In other words, not for sale. However, is it right to still liable to import duty to the EU? And by marketing material, they mean free products, displays, etc.
Right. I mean, you can put on that it's you do have to put a value on the invoice. So you have to put the commercial value of the products, but you can also put a statement to the effect that these are are not for resale. They're samples or they're marketing material, and they have no commercial value. And then there shouldn't be any duty, but that depends on the customs official that looks at it. Unfortunately, we've had varying reports about that being charged or not charged.
Okay, thank you. Just to remind everybody, copy of the presentation with Mike's contact details will be circulated after the webinar. Does anybody else have any questions for Mike this afternoon, please? Nope. Fantastic. Mike, diolch yn fawr, thank you very much for this afternoon. Very informative and in-depth. Copies of the presentation will be circulated to everybody. Thank you for your time today.